Hi guys, in this video we're going to tell you why everyone, and I mean everyone, needs income protection insurance. We're Shannon and Michael of Healthcare Genius. For the best information on healthcare and retirement, please subscribe to our channel, like our videos, and click the bell to be notified when we come out with new content.
Let's tell a little story about a cousin of mine who was a doctor, podiatrist. He started his career, built his practice up, become board certified as a surgeon, and was in his early 40s, and one day he was operating and his hand went numb. Now fortunately he didn't cut anything or didn't hurt his patient, but it freaked him out a little bit. So he went to his doctor, they did a bunch of tests, and finally determined that he had MS. Now here he is, he's in his early 40s, he had spent a good 8 years building up this practice to where it was pretty financially viable for him. And if he was going to sell the practice, he wouldn't have gotten a whole lot. He might have gotten a year's worth of revenues for it. Prime of his career, he could no longer perform surgery. Now, he could probably go out and teach medicine, but it wasn't really something he wanted to do. He was passionate about being a surgeon. In most cases, without income protection, he would have had to go out and start teaching or find another job, do something else that he was qualified to do to make a living. Fortunately, when he was in his late 20s, early 30s, he had come to me and asked me about disability insurance. So we looked at what he was doing, what his income was at the time, and we were able to secure him a disability policy that would pay 60% of his income. It also had a provision that every year, if his income went up, he could actually increase the amount of coverage that he had. So rather than being in that position where he had to go find another job, when that happened, the disability insurance company looked at it and said he can no longer do his own occupation, he can't perform surgery, so we're going to pay him a benefit, and we're going to pay that through his age 67. So made a huge difference in his life and really allowed him to live the life that he wanted to without having to go do another career that he really wasn't interested in after spending all that time in medical school and in his practice.
Let's take a step back. What exactly is disability insurance? There are really two parts to it, and one is short-term disability and the other one is what we think of as long-term disability. So short-term disability is meant for people who either have some kind of an accident or some kind of illness where they can't work for a period of time, but they are expected to return to work. And it's has a deductible similar to a medical insurance plan where until you meet your deductible, the policy doesn't kick in. So for most short-term disability policies, for the first 7 days that you can't work, you incur the costs. Now, for a lot of us, we either have vacation or sick days or something like that that can kind of help us out with those first 7 days. And then after that, the insurance policy kicks in and it will pay you up until the 6-month mark that you can't work. So if you have a situation like Michael, your cousin, did, where you can't work for whatever reason, that's where long-term disability comes in. It kicks in at about 90 to 180 days, somewhere in that time frame, and it's designed to pay you until the age of 65 or the age that you can start collecting Social Security. So the next piece is, what does short-term disability cover? What does long-term disability cover? Short-term disability generally covers 60% of your income, but there is a cap, and that cap is usually either $1,000 or $1,500 per week of income. And long-term disability is, again, usually on average 60%, but it can be, anywhere from 50 up to 70%. 60 is usually where we see the average, and there is a cap on a lot of those policies. That's usually $6,000 a month or $10,000 a month.
And Shannon, just to kind of give an example on the short-term disability example, we see this a lot with maternity, where somebody is pregnant and they're going to have a baby. Most short-term disability policies will pay for 6 weeks. So in the example Shannon gave, if you had a 7-day waiting period, then you're going to have to pay the first 7 days, and then the benefit that you would receive would be for 5 weeks total. So because that first 7 days was considered a week. If it's a complication, so if you had to have a C-section, that gets expanded out to 8 weeks in most cases. So for the example of a C-section, it might be 7 weeks of pay that you would receive on your short-term disability policy. But it's just important to understand how that deductible / waiting period applies when you're actually getting a benefit. Now let's look at some of the key terms and provisions of most group disability policies. Total disability, that is normally the definition of how the insurance company is going to determine if you have a loss of income that they're going to pay you. Normally, a provision of earnings or duties, or both. So some policies will require you to have a loss of duties. So what does a loss of duties mean? Basically, that just means that you can't do a certain part or all of your job. So again, in my cousin's situation, where surgery was a part of his job, he could no longer hold a scalpel and be reliable. He had a loss of duties. Now, earnings is different because in his situation, if he'd had a partner as an example, that partner may have continued to pay him his salary or income. In that case, he wouldn't have had a loss of earnings. So he may or may not have qualified. Obviously, in his case, that wasn't the situation, but just know that some policies have one of those losses, some will have both, where you have to have a loss of both duties and earnings. Really applies to business owners in a lot of cases. Another provision is partial disability. So some people may or may not be able to do all of their job or come in for 8 hours a day, but maybe they can work 4 hours a day. That happens a lot of times with backs, where somebody can't sit at their chair or what they're required to do. So there are provisions in these plans that will cover you for a partial disability. You normally have to have a 20% loss of earnings to qualify for that. So another example. Stress. We all, at one time or another, get stressed. If you get stressed so badly that you can't work or you have to take off work, that's normally considered a mental nervous condition. And most of these group policies will cap the amount of benefit that you can receive, or the term that you can receive, at 24 months for a condition like mental nervous or stress. Substance abuse. Another provision that is limited to 24 months on most policies. So if you had to go into rehab because of alcohol or drugs and you couldn't work, you won't be able to do that indefinitely. Most policies will stop at 24 months, covering you for that condition. Own occupation. So we mentioned it with my cousin being a physician, where he had coverage for the full time through his age 65 for that own occupation. In most of the group policies, they will have a 2-year or 24-month limit on own occupation, and then after that would be anything that you would be able to do by training. So again, the example of being able to teach medicine versus actually performing medicine would be a good example of that. After that 2 years, you would have to start doing some job that you were able to do to earn a living. Finally, something to look at when you're looking at your policy are the pre-existing condition limitations. Most group plans have a pre-existing clause, and that essentially will say that if you had a condition 12 months prior to coming onto this plan, you have to wait 12 months before you can actually collect on that condition. So just be aware of it, because we've had situations where an individual thinks that they can get coverage right away because they came on their group plan, but because they had sought treatment for some condition, they were not able to get coverage for that disability.
So the good part about this provision is that because most group policies have it, it also means that most group policies don't do a lot of underwriting. Now, what that means is that whatever your medical history is, whatever pre-existing conditions you do have, you can be covered. You just do have that 12-month period that you can't receive a benefit if you do have certain pre-existing conditions.
And Shannon, that's a great point. You're going to talk about individual policies in a minute, which mostly are underwritten. When it comes to the group policy, so if you'd had cancer a year and a half ago and came onto a plan, you would still have the ability to have coverage, whereas with an individual plan in underwriting, you may or may not qualify for a policy having been out of cancer for that shorter period of time.
Now, we mentioned an individual policy. When most people think about disability insurance, they generally think of what they might get from their employer. And that's because those policies are a little bit more common, but we want to talk to you about why it may make sense to also have individual disability insurance. Like we mentioned earlier, the group policies only cover, on average, about 60% of your income, and there are caps. The other piece of that puzzle is that if your employer pays the premiums for those policies, whatever you get, whatever benefit you get, is going to be taxed. So you might think that you'll get 60% of your $6,000 a month. You might think that you'll get $3,600 a month, and that might be enough, even though it's less than what you're used to. But then after tax, you're really looking at more like $2,000 a month. So it starts to really be concerning for people who rely on their income to pay their bills, pay their mortgage. So for some people, they want individual disability insurance to supplement that 60%. So they want to buy that additional amount, so if something should happen, they can have full income replacement.
Again, people aren't thinking about the tax side of things when they're looking at disability, so understanding that component. And then there are some insurance companies that will, for the right number of employees, actually waive the underwriting, so there's no medical for those individual policies. So they can be a great benefit for both your higher income earners and employees who are just trying to cover that higher amount of their income when you factor in taxes.
We're Shannon and Michael of Healthcare Genius. For the most up-to-date information on healthcare and retirement, subscribe to our channel, click the bell to be notified when we come out with new videos. And if you'd like to learn more about disability insurance and become a client of ours, go ahead and visit the link in our description below and apply.
Don't forget to like and subscribe.